Welcome, ladies and gentlemen, to Commodity TV and the Precious Metal Summit here in Zurich. And now we want to talk to Oliver Turner from Karora Resources, the famous gold producer out of Australia. Oliver, thanks for taking the time. Welcome.
Thank you very much. Always good to be back here in Switzerland and talking to yourself, of course.
Absolutely. Thank you. Great in person. And I think it's exactly 1 year when we spoke the last time. Yeah,
yep,
really
that's
crazy.
Right.
I think it was, again, a very good year for the company, right?
Yeah, absolutely. Look, we're well on track towards delivering our guidance this year. It's been 3 strong quarters, round about that 40,000 ounce a quarter mark that we've been delivering, which is consistent, reliable, predictable, which is what we aim to be. Produced about 120,000 ounces so far this year, so very well positioned to deliver 145 to 160,000 ounces. Of course, we've had some tremendous success via the drill bit, which we can talk about. And then most importantly, that growth plan at Beta Hunt, we put in the extra infrastructure, ventilation raises, everything on track, delivering what we said we would do.
Yeah, fantastic. Yeah. No, that's really in a nutshell. We can stop here. No, we won't. Of course. No, I see it the same way. I'm a shareholder of the company, happy shareholder, because I invested very early. I trusted always Paul and the team because we did Klondex together. So that was really fantastic. So production looks great. What's about the cost side?
Look, we're tracking it right in the middle of that range as well. So our guidance was 1,100 to 1,250 on a US dollar basis for the year. Year to date, we're sitting at 1188. This last quarter came in at 1196. One of the things we did note in the press release that we put out last week is there's about $22 an ounce in byproduct credits where we didn't sell last week. So you would have chipped that down a little bit further as well. But again, we're going to end up right in that range like we expected at the beginning of the year, and really happy to be there, particularly in the labor environment that we now find ourselves in. The whole mining sector, and particularly Western Australia, we have managed to control that pretty well.
Okay, super. So that looks all fantastic. How does it look like with the mill enlargement?
Yeah, absolutely. So the mills are performing very well. Higginsville's tracking along very, very well. We did have some repairs that we were making during the third quarter. We expect to complete those during the fourth quarter, which is good. At Lakewood, we're working on the mill expansion to 1.2 million tons per annum from 1 million tons per annum. That's working really well as well. We're finding a lot of ways that we can improve the operation of that. But look, I mean, year to date, our recoveries across both mills as a unit has been about 95%. I mean, it doesn't get much better than that, which is really good. Great recovery from gravity. The mills are performing well. We're looking at some other optimization work, but we're really happy with where they are.
Fantastic. So that brings me to the exploration side of the business, because you are enlarging your mills. That means you need more mill feed.
That's right.
So
what
have you found?
Absolutely. Yeah, we've got a couple exciting announcements coming up. We'll have a resource update before the end of the year. But in terms of things that are not going to be included in that resource update, so we're taking a look at what could potentially come in the 2024 resource update. One area we certainly love to highlight is Fletcher. Yeah. Right. We've had some phenomenal results. You remember the results earlier this year, that one drill hole, 7 meters of 46 grams, about 150 meters away from existing infrastructure at Larkin. Just phenomenal. And these are the kind of things, when you talk about the expertise that Paul has in mining and that we do as a group, operational flexibility is something that comes up a lot. So when we're able to open up these new areas, it provides additional operational flexibility for where you get that tonnage from. To your point, allows you to get more tonnage out of the mine. And then most excitingly, look, Beta Hunt is a 2.5 to 2.7 gram underground ore body that moves a lot of tonnage. We've got a base level feed that works very, very well. Are there ways that we can improve that grade? Because any grade improvement is delivered directly to the bottom line as free cash flow. So some of the areas that we're looking at now, like Fletcher, like Mason, like Cowsill, are potentially higher grade resource bodies that could add flexibility, but also boost our head grade in years to come. We're not there yet. We need to do more work, but that's one of the projects that we're focusing on is there a way to boost head grades there and drive more free cash flow to the bottom line?
Okay, super. That's, of course, then that raises the question when we will see the 200,000 ounces per year.
Yeah, that's right. So our guidance for next year is the 170 to 195. So just below that, we'll exit 2024. So just take a step back and take a look at what happens in 2024. So 2023, we added the vent raises and the second decline. That's done, right? In 2024, the development work goes in place to bring on additional stopes for that 2 million ton per annum capacity. So we'll exit 2024 at that 2 million tons per annum mark. 2025, you'll have your first full year at 2 million tons. And that's when you'll see that 200,000 come out, because it's predominantly Beta Hunt. Higginsville has been a huge asset for us for multiple years. In terms of mill feed, it's being squeezed down a little bit. So we're looking at higher grade areas at Higginsville. Of course, Spargos Underground will supplement the feed there as well. But 2025 is the year that we'd be aiming for that.
Okay, super. So what do you want to do then with all the cash?
It's a good question. Absolutely. Look, we added $13 million in cash to the balance sheet this quarter, which is great. At the same time is investing in exploration. At the same time is investing into the growth plan. With the success we're getting with the drill bit, it's hard to argue not to put another $5 to $10 million into exploration.
Absolutely.
For $35 an ounce, we're adding an M&I resource ounce. So it's a fantastic return via the drill bit. There's some operational upgrades that we can make at both mills, obviously improvements at the mine. But look, building cash is never something that our shareholders are not happy with.
It does not hurt.
No, absolutely. It gives you more flexibility. And then, of course, there's ways to return cash to shareholders in future years once we're off of that growth spend. So it allows us a lot of options. Let's put it that way.
And you're also buying shares back, right?
Yeah, the NCIB is, we just renewed that. You're right, 2 weeks ago. So when it drops those levels where we view it as undervalued, we can execute on that NCIB as well. All of this is a balance. It's all about capital allocation. You have a lot of different departments that are screaming for more capital, and you got to allocate. That's our job as capital allocators. You got to allocate correctly. So far, we've done it well, and we look to do that in the future in 24 and 25.
Glad to hear that. Fantastic. Yeah. Let's come to the nickel business, I would call it, because you guys found a lot of nickel, and I think you have a separate plan for the nickel development.
That's right.
How's it going there?
Yeah, it's great. So look, we're sitting on just under 35,000 nickel tons. That's contained nickel metal in the resource today, which, by current nickel prices is close to $1 billion worth of nickel in the ground today, in resource, ready to be mined. So we're very excited about that. One of the things that ventilation that we executed on this year allows us to do is not only increase activity in the gold part of the business, but also really start to do real work in the nickel side of the business. So we've been working on internally some additional engineering work on where nickel production could be in future years. We put out a PEA in August of 2022. That was a starting point. We certainly think we can improve upon that. So with Lee Junk, who's the new MD in Australia, he's brought on a dedicated nickel team in terms of engineer, geologist, is developing that mine plan. Look, obviously I can't give you any numbers, but what I will give you is what the mine was doing historically. 66,000 nickel tons were produced over the 30-year history at Beta Hunt. In its peak years, it produced about 4,000 to 4,500 nickel tons. Can we get back to those levels? Certainly something we're looking at. We certainly have the resource base to support something like that. And with modern mechanized mining, remember they were mining with jacklegs, guys with jacklegs and stopers in the mine previously. We think we certainly have a chance of getting there. So doing more engineering work on that. We'll be announcing that next year. But I like to call it the mine within the mine. You get 2-for-1 special. You can go left to mine gold and go right to mine nickel.
So straightforward copper?
Exactly. We may be there one day. We'll see. But it's certainly an exciting and unique asset.
Yeah, absolutely. Because 4,000 tons of nickel today, that's almost $100 million in revenues.
You're absolutely right.
That's a lot of money.
Pretty exciting, especially from a byproduct credit basis, right?
Yeah, exactly. Yeah. Because everything is there. And so how, what would you then do with the nickel? I mean, you would not process it by yourself. I understood that you have, I think BHP is one of the direct neighbors, right?
Yeah, you nailed it. So we remember for a couple years now, we've been doing some remnant mining, just small scale mining at Beta Hunt, but $20 to $30 an ounce of byproduct credits. What we've been doing previously was trucking at 440 kilometers north to the Leinster concentrator at BHP. And believe it or not, 400 kilometers is almost like next door in Australia. They're fantastic truckers. But a year ago, BHP restarted the Kambalda concentrator, which is 4 kilometers away from our property.
Slight difference.
Yeah, exactly. 100 times reduction isn't so bad. So we now deliver it to them. They pay us for the metal content. We get 80% of it up front. The remaining 20% comes out the back end, and we get a check written for us every single quarter. So great place to be. And why does BHP want all of our nickel? So to answer your question, we will not be needing to build a nickel concentrating facility, right? Now, why do they want our nickel so badly? First of all, it's 2.7% nickel sulfide on their doorstep. That's pretty good. But number two, there's no arsenic in it.
Oh.
So it is a very, very clean product. And they're sourcing from multiple other mines in the region. And they like our product because they can blend down arsenic content in other operations with ours. So, with the whole EV battery metal chain that you've got going on, having a clean supply of nickel in Australia is something that's highly coveted, and we can deliver that.
Yeah, and exactly. And only 4 kilometers of transportation. That's a good environmental footprint, I would say.
Exactly. Yeah, not bad at all.
Fantastic. Super. So I would say things look fantastic this year, but even better for next year.
Yep.
And you are full on track.
Absolutely. Let's continue to execute.
Thank you very much. I couldn't say it better. Please do that because I'm a shareholder.
Fantastic.
And I love to see higher share prices.
Yeah, happy to.
Thank you very much,
Thank
Oliver. Yeah, ladies and gentlemen, there was Oliver Turner from Karora Resources. I'm a happy shareholder of the company. And honestly, my charts, my point and figure charts are telling me 750 is the next price target, then 950, but it could go as high as 12. This is absolutely possible. And to be honest, when I hear what I just asked Oliver in the last 10 minutes, it's absolutely possible that this would happen, especially with a little bit higher gold price, and the nickel is also working well. So I think the company is perfectly set up, poised for growth. That's exactly what you want. Check it out. Thanks for watching us, and bye-bye from Switzerland.